give let's give a few minutes here to let everybody pipe in. We should probably have over 4,000 people on the call today because
Yeah,
Tommy is such a famous
I
person.
like to wait till I see people pop in. Like here's what we're gonna do. Like everybody's on here. So I'm gonna let Jeff in, who's gonna be late, okay? Because Jeff's not, well, never mind, you just ruined my idea because you let him in. So
Oh, okay.
the next person that comes in late, I'll let him in, and we'll see what comes in. So anyway, dude, let's just get started because we got a lot to cover in a short period of time, and we got Tommy from Prime Corporate Services with us today. I'm so excited to have you on for a lot of different reasons because you guys are our go-to for all of our entity structuring, our tax advice, our trust, our trust formations, and everything pretty much under one roof. So thank you for joining us, and I want to be able to spend a little time talking about what you guys can do for our community and how, because we have a really unique community, right? And I really want to talk about that just at a high level, because I cannot tell you how many times like we do a lot in installment sales, and we'll get into that in the call, but they go, what's that? And I go, as soon as somebody says that, that's either your attorney or your tax advisor, you need to fire them immediately. Okay. Because if I know more than they do, that's a huge problem. That's all that I'll say about that. So I don't want to talk anymore. Tommy, tell us about what you guys do and what we're going to be able to offer up to the group and some of the cool stuff that we have in store for them.
I love it. Yeah, thank you so much for having me on. Just a light 4,000 people meeting. That's how we like it. So thank you. I talked to Nick for a little bit yesterday, and he said, "Hey, this isn't the beginner class. You better bring some heat. You better make sure that they're getting a ton of value out of this call." So thank you to Nick for the warning. That
yeah, this is not remedial math here. Let's just leave it at that. That's taught at another day and time on a whole different channel.
I'm gonna share my screen. I have some slides just to kind of keep me on track, and then towards the end, I want to open it up for a little bit of Q&A. But I also want to make sure that there's as much value as possible. So the Q&A that we'll do, I've got a final screen talking about how you can separate your active and your passive and what to do with the installments, and we'll make it happen here. So
and real quick, so I tell everyone before we start is put all your questions in the chat, and then we'll start rolling through those at the end if we can get through it in the time we have.
I recognize some people in here as well. William, I know that I'm pretty sure I've spoken with William before, and we got I saw in the Facebook group there's a couple people that I know and that we already work with as well. So it's hopefully more of them show and we can talk to them. Hey, could you give me access to share my screen here?
I thought I did, but let me do it again. Let's see here.
And then also put in the chat the website and everything that you guys can go to if you have any more questions. And
Eric, you put that in there so because he's running the PowerPoint. So
yep, no, I already did it.
All right, good. And guys, if you got a question that you want to ask at the end, raise your hand, and if we have time to end, we can ask that. Otherwise, just throw it in the chat, and we'll get to those as well.
Yep, that's perfect. So it's not what you make, it's what you keep, right? And what I love about talking with Nick yesterday and just the idea around everything that they teach, the beauty of real estate is the ability to build wealth, right? A lot of wealthy people invest in real estate because of the tax benefits. So if you're investing in real estate and you're not maximizing from a tax scenario, you're shooting yourself in the foot. You're having to work a lot harder as opposed to smarter when it comes to a tax standpoint. So Prime Corporate Services, we've been in business for 10 years now. We've helped over 100,000 entrepreneurs structure their business. But that's where we focus: entity structure, tax mitigation, tax savings, asset protection, estate planning. And we do a lot of business credit development as well, which I'll make sure to talk a little bit about as well. So those are the takeaways. That's what I want to cover. I want everyone to take something away that's going to value themselves or value their business. Number one, different types of entities. What's best and why? Number two, how do the tax deductions work? What are you actually eligible for as a real estate investor? And a big thing that I want to talk about, especially with the installments, is where the deduction should be taken, right? If you have multiple real estate income streams and there's an active and a passive, let's offset that active as much as possible, because the passive has got such phenomenal tax benefits as is.
Yeah, so let me just chime in. So guys, we talk about in the Creative Deal Maker, community, it's all of, the idea is to generate cash now, cash flow, cash later. Well, those are all three different types of money that are treated differently from accounting perspective. And two, there's also different entity structures, and that's what we're going to cover here a little bit in the presentation.
Yep. I love that. And the big thing is, a lot of times, if you're about to make a financial decision or a business move that's going to impact your financial situation or your tax situation, that it's so important to have a team or have an accountant or a CPA, to Nick's point earlier, that you can call and you can tell them the numbers and the deal that you're getting into and how to orchestrate that deal so that you're lowering that tax as much as possible. So those are all super important factors. Number three, asset protection and generational wealth. The final slide that I'll go over, I love that slide because it gives you a visual and it helps you understand how money can flow, how you can pay yourself out, where to pay yourself the salary or the distribution, and how to separate short-term and long-term, and personal credit versus business credit, how to get away from having to use personal funds or personal credits. Okay. I am not a CPA or an attorney. That was the first thing Nick asked. You're going to have the CPA or the attorney on. I'm like, no way. They'll do the work. The CPA, we've got a full team of CPAs. I've got about 40 accountants right now. I've got a full team of attorneys. They're the ones that do the work. I like coming and talk to you as an entrepreneur and as an investor, right? I'm actually the president of Prime Corporate. A lot of times when you talk to accountants or you talk to attorneys, they're going to tell you what to do to stay out of trouble, which is great. Everyone should have that. But as an investor myself and as a business owner, I want to come to you with some of the things that I personally do and some of the options that you do have before we send you over to the accountants and the attorneys to keep you out of trouble. Cool.
Hey, Tommy, do you want to talk real quick? So I know there's a lot of people that are probably taking notes and stuff, but do we want to talk about what we're going to be able to give them after we go to this overview, so they can, as far as the ability to schedule that, do we want to let them know now and up front so they can?
Sure.
Because that could also help with some of the questions.
Yep, that's a great idea. And like we said, we'll do some Q&A towards the end, but to Nick's point, I'm happy that you say that. We are going to offer a free consultation for everybody in this group. It's 45 minutes to an hour. Eric dropped the link in the chat there. Click on the link and then just pick a time that works best for your schedule. We are slammed right now with it being tax time. So we're a couple days out. But make sure you schedule a time that works best for you. The reason I want to offer that to everyone's situation is different, right? I've been doing this for a long time, and a lot of people are open to just jumping on a Zoom and telling everyone their life story and telling everyone how much money they make or don't make. But everyone's situation is different. So that's an opportunity to have a one-on-one consultation to break down what you already have, where you're going, what your goals are, and how to make sure you're structured appropriately. Cool. Anything you want to add to that, Nick, or anything I'm missing?
No, I think that's important because we're not going to be able to cover, because a lot of people already have entity structures, right? The question is, are they the right entity structure for what the model that they're going to be implementing? Because that was my biggest challenge when I first started getting into real estate. I created a structure that I thought was correct, but as things evolve over time, the risk changes, the liability changes, and just the formation changes, and the especially from the asset protection side of it. So I think that's a very important piece, that what you're going to talk about today is a very high level, but when they book that call, they'll be able to address it on a more individual level relative to what their own needs are.
Yep, I love that. That's great. Because on an elementary level, really what we're trying to accomplish is protection and privacy, tax benefits, and the ability to show yourself as a legitimate business. But as you get more granular with what you already have in place or what you need to have in place, it really comes down to the way that it's structured and how it's communicating with each other. So what I mean by that is, when you set up an entity, there's different ways to tax it, right? LLCs, for instance, you can go sole proprietor, multi-member, S Corp, C Corp. What's best and why for your situation? And you can have those entities owned by holding companies to give you additional privacy and additional protection, right? And then from there, having the articles of incorporation and the operating agreements that are legally prepared and actually drafted for what you're going to be doing helps with the protection and the tax side as well. So not all entities are set up equally. If you've set up your own stuff, or if you've gone to an attorney, we're happy to review a lot of that stuff for you as well, if those are things that you're second guessing.
Which is a question that I always get asked, is like, if I already have an LLC, is that something, do I have to go start a brand new LLC again over if it was done wrong? Is it something that can be modified or fixed? What's the response on something like that?
Everything can be fixed, right? A lot of times people will push you into just completely setting something new up because it doesn't fit their model or it doesn't fit the messaging that they have. Everything is fixable at the end of the day. We can file amendments, but what's most cost effective to you and what makes the most sense, right? If it's completely just out of whack and you've been using it a long time and it's set up for an online business that you're doing real estate from, probably makes sense to just start something new. But if it's minor changes, don't have an operating agreement, set up for a different type of real estate transaction, all those are easily amendable for
Thanks.
sure. Okay. So from a tax standpoint, going back to this here. So I don't need to beat this over the head because I know we do have a more advanced group here, obviously, but from a formal business structure standpoint, on the active income, anything that you're wholesaling, anything that you're fixing, flipping, the LLC that you have, is it feeding into a holding company, or is everything going through an LLC, right? The reason I say that, once you're making that $50,000 to $100,000 mark on an annual basis, it's probably worth it to change that to an S corporation or have an S Corp election so that you can pay yourself a salary or a distribution, but also avoid half of your self-employment tax, right? Little things like that on 100,000, you avoid half your Medicare and Social Security, you're 7 to 8% back in your pocket, as opposed to handing it over in the form of taxes. And those numbers are going to continue to compound, obviously, as you generate more money, right? From a tax standpoint, I love what Nick said earlier. When you're interviewing your accountant or interviewing your CPA, ask questions around the business model you're pursuing, right? Whether that's installments, whether it's questions around active versus passive, whether it's questions about the entities that you have in place, and asking them if they're being utilized to their full potential. If there's a lot of hesitation, naturally it's going to be rather telling. So from our standpoint, we work a lot with real estate investors, right? And we do over 5,000 tax returns a year. What's nice about working with a company that has a lot of accountants and a lot of CPAs is they communicate with each other. So someone in this group is going to stump one of our accountants and one of our CPAs at some point, but they have 40 other people that they can turn to. And there's probably a case study where they can break that down to give them that bottom line. So keep that in mind. From a tax deduction standpoint, everyone's invested into education, coaching, masterminds. We don't want those to fall under education. Let's make sure it's research, development. That way those are 100% tax deductible. When I'm on this, one of the common questions that I oftentimes get is, or the feelings that I get is, Tommy, just tell me a couple tax codes that are going to save me money off the top. The best way to really interact with the tax code is look at the most recent changes. Every year there's tax code changes that are meant to impact behavior. And over the last 2 years, with COVID being a thing, if you had COVID or were impacted by COVID in any way with your business, there's COVID relief tax deductions that you're able to take advantage of. So make sure to bring that up to your accountant or your CPA, with everyone being self-employed. And then business meals. It's a huge one. Everyone has business meals. Everyone communicates over food. And those going from 50% deductible to 100% deductible. I know they seem like very, very simple things, but those are two major changes that give you an additional percentage off on your taxes. So before we get into the active and the passive, Nick, Eric, anything that you want to add here in regards to deductions or any questions? Anyone have any questions?
Yeah, I do. I love what something you just brought up, because Nick and I are, we are products of masterminds, and we are business partners because we met at a mastermind. Gosh, I haven't figured out the exact date, but it was over 10 years ago. So Nick and I have known each other a long, long time. And then we actually created creativedealmaker.com and the Be the Bank blueprint on how to create cash now, cash flow, cash later. But what that is, we're products of that network, which is how we met you guys, right? Through our other mastermind we're in. But one of the things you just mentioned with masterminds is they're pretty, they're decent annual investments. And we also get a huge return on investment from these relationships. But when you said treat those as research and development versus whatever else my current CPA that we're talking about, can you dig into that a little bit? Because education is probably the number one investment. You should invest in yourself all the time in all aspects, from business to finance to personal development, marriages, whatever. I mean, whatever you need in life, it's all there. And so explain to me what you mean by, is there a way to tell me what you mean by get the 100% deduction on research and development versus not as much as a deduction for your business expense joining masterminds?
Yep, I love it. Absolutely. So there's two ways that you have to look at that. I mean, to lay that out for you, when you write something off as education, a lot of times the IRS tax code wants to limit you to $3,000 a year and carry that forward to the following year, or they're going to ask for it to show that it's an accredited university. So a lot of these masterminds and a lot of these groups are not universities, they're wealth building, right? So education is a little bit of a gray area in regards to these investments, and most of them are well over $3,000. So if it fits into the business model, it's easier for you guys to be able to write them off because you make a significant amount of money, and those large investments are naturally going to offset for ongoing business related expenses.
Yeah.
But for anyone that's just getting started, research and development, startup, organizational, those are three very quick areas within the tax code that those fit into and don't limit the deduction of what you're investing into yourself and into your business. So
is that 100% on all that, Tommy?
Correct. Yeah. So when you have a new business, you can show losses 2 out of your first 5 years. So you get 5,000 for startup, 5,000 for organizational, but there's caps there as well. So that's where you have to find the other areas of the tax code to make sure that your account, and that's, you should ask your accountant what percentage of those things you're writing off. That's even for both of you. Ask them how much of that percentage they're writing off. If it's 100, they should be able to tell you what category they're writing it off under. And usually that's not going to fall under education.
Right.
Awesome.
I love it. I love that. That's super important when you're growing your business or you're active like we are. And we pride ourselves in having strategic relationships through our mastermind groups and obviously through the people that even join our mastermind. It's good stuff, good information to share.
And with something like that with travel, right? So I feel like I'm gonna be living in Vegas over the next month, going to and from events. And it's when you're going for business, it's strictly business related. From the second I leave my house to the second I get home, everything is a deduction. The meals, the Airbnbs, the hotels, the flights, all of that from a travel aspect, we want to track and we want to make sure to keep those expenses.
But there's a lot of accountants. This is what I was alluding to earlier when we started. A lot of CPAs, and they'll come out and just say, you know what, we don't want to push that envelope, right? We don't want it. You don't really want to show it at 100%. You need to be at 65 or 70% because you don't want to. But that's not what we're talking about here. If you have the deduction, you should be taking it, period. So why the tax code is written the way that it is. You cannot be afraid. I mean, I've switched accountants in the past, and just for that reason, it's like, well, I don't see there's any way that you're gonna not have to pay $50,000 in tax. And I go, well, I don't see that there's any way that you're gonna continue to be my CPA because that's ridiculous. Right?
There's over 70,000 pages of a tax code, right? And that's why I'm happy Eric asked that question, because it's not a matter of if, it's understanding that the tax code is such a game and it's such a joke that a lot of times really, if it doesn't fit in one area, it's going to fit in another. And it's just a matter of tweaking the verbiage of what that investment was for. I guarantee there's someone in this group right now, even someone watching this, and please tell me in the chat if you have, where you invested $10,000 into education or training. And when you tell your accountant or CPA it was for education, they tell you, oh, we can't write that whole thing off. Are you crazy? Right? But if it was just tweaked with the verbiage of research, developing, networking, training, those all become 100% deductible.
Yeah.
That's the other thing is the wealthiest. So, obviously the politicians and everyone, they get all upset about the wealthy making money. Well, the wealthy have resources to do what the tax code tells them to do in order to not pay taxes. They pay taxes, they just limit the way they do it. And that's the key to this entire model, especially as a real estate investor. I mean, Nick and I, our model is, cash now, cash flow, cash later, becoming the bank, right? So what that is that's basic regular income for us. But then there's other things we can invest in, right? Or we can slow down the taxes by the installment sale model, but we can invest in other things, commercial properties, apartments, whatever, to offset all that off. So we do both. That's how we run that's how I run my personal business. Because the cool thing about Nick and I, we're business partners in Creative Dealmaker and the Be the Bank Blueprint, but we also buy assets together. And then we also have our own businesses too. And then we won't probably go into it today on how we structured our relationship with our business, but it's going to happen because if you want to just be a solopreneur and do what we do, you can actually do really, really well doing it. But if you want to scale and go a little bit bigger, it's your team. It's finding everybody's unique abilities to grow. So
the other thing I want to add to that, Eric, is that like if you and I do business together, so we have a very specific structure on how we want to do it. But guess what? Anybody outside of you and me that wants to partner and do deals with us, they have to have the property entity structure as well.
right.
If they don't, we're not going to be doing business with them because we're only as good as the weakest link in the relationship, right? And if your relationship that you have doesn't have the correct asset protection or structure, then that can have an impact on me and you as well. So the other thing I want to say about CPAs or accountants, they're very much like doctors, right? They may know a specific area of the tax code that they excel in, where others they do not. A doctor, you may have, the best cardiologist in the world, but if you have a foot problem, he's not gonna know squat about your foot, even though he's a doctor, right? Accountants are the same way. So we need to find the right accountant for the diagnose whatever our issues are that we have for remedy. And we have a very unique situation with our cash now, cash flow model. And that's what I like about Prime Corporate Services. They have such a wealth of how many CPAs and tax advisors and accountants and attorneys do you guys have under your umbrella right now?
40 accountants and CPAs and 3 attorneys, and we probably need more at this point, but we make sure that they have at least 10 years experience under their belt to be able to come in initially. So we're very selective with who we bring in. And the reason for that is when you have an accountant or a CPA, it's not about just filing the taxes and finding the loopholes. It's actively planning throughout the year, quarter 1, 2, 3, 4, going into quarter 4. It should be like, Nick, Eric, listen, great job this year, but either you're paying that $50,000 to the IRS, or you need to make some investments that are going to better your business, right? I mean, this December, we prepay for our Salesforce and for our phone bills for the whole following year, not because we want to do that, right? We would rather the money, but if we're not going to pay it, then it's going to the IRS. I'd rather prepay some of those expenses to make sure that I'm bettering my business in those areas.
Right.
So have the planning in place as you grow, as you scale. Once you're making the 200, 300, 500,000 or more, there's a lot of strategies as well around conservation easements and getting more creative, the captures, creating your own, becoming the bank is obviously massive. Then become your own insurance, then become your own dealer, have the installments pay for the vehicles. There's so many creative, cool things that you can do that give you the protection and give you those additional tax benefits.
Awesome.
Additional benefits, asset protection, obviously one of the first things that you set up. And this is to Nick's point of you're only as strong as the weakest link, right? There's 76 new lawsuits every minute. The top 9 lawsuits filed are real estate related: breach of contract, slip and fall, premises liability. The more money you make, the larger the target on your back becomes, right? So a lot of times it's not a matter of if, but when. And if you're structured properly, if you have the additional privacies and protections, it makes it a lot easier to make sure that your personal bank accounts, your personal homes are protected. But then a step further, your active income is separate from the installments and from the passive income as well, from an asset protection standpoint.
So Tommy, I think you alluded to this earlier a little bit. So at what point in your process of becoming an entrepreneur, real estate investor, whatever it might be, is the formation of the entity, whatever that structure is needed and or recommended? I mean, recommended and needed might be 2 different answers, but I'm just curious what your opinion is on that.
You don't need to do anything. So I have to say that as part of the gig, right? I obviously have a biased opinion. So I like to just tell everyone straightforward. Recommended on my side, all the IRS is looking for is that you are showing the intent to treat and operate something as a business. So the second you have the idea or the inkling that you are going to be a real estate investor, or the second you spend your first dollar, you should be structured as a business, right? Because the tax code is set up to benefit those people. Everyone in America should have an LLC if they understood how to play the game. The reason for that is you can show a loss 2 out of 5 years. So good or bad, profit or loss, you have the ability to put yourself in a better position if you're taking advantage of what the tax code is laid out to do, and that's benefit entrepreneurs.
Yeah. So, hey, Tommy, real quick. So one of the things so I've been in business I've been self-employed since 2004. I've had every structure you can think of I mean, I still have it. I have everything kind of, I've had LLCs for a long, long time, same ones. But one of the biggest things that we talk about, or I have in the past, is as a real estate investor, is anonymity. And so when we talk about anonymity, is, there's, I'm gonna create a trust, and then the trust is going to be owned by a personal property trust, and then the personal property trust is going to be owned by an LLC, and then that's going to be the document's going to be signed by an attorney. And so I've got 17 layers, which is phenomenal. But it's a hassle, to be honest with you. It makes it. I just want it to be. My whole life now is, how do I simplify it? And then actually working with you guys, it opened up a whole new world. I'm like, oh my God, this is so simple. And every time, so you have certain assets that do this, certain assets do this. You have your holding company that does this, and then you have your I guess as you really grow wealth, you have your trust that kind of runs that down. But talk about anonymity, and maybe, is there a reason for it, not a reason for it, depending on how you structure your assets?
I'm going to skip forward 2 slides because it's such a perfect transition to what you're mentioning and what you're talking about.
Okay.
This is not staged. We didn't talk about this. I promise everybody. This is exactly what you're mentioning. So the structure is a living, breathing organism. It is constantly going to change, right? That is the rude reality. Is the dollar has changed in value from the time this call has started. Your wealth is going to continue to change. How can you make it simplified and easy to where, what Eric is saying, you don't have to untangle this total spider web mess every time you purchase another property or make another business deal? So let's talk through this from top to bottom. Privacy, protection, and tax benefits are the goal, right? If you own real estate, you need a trust, right? Bottom line, I don't care how old you are. I know no one's planning on dying tomorrow, knock on wood. There's no easy way to say it. If something happens to you and if your assets go to probate, you're making it a living hell for your family. We don't want to do that. So trust, will, living will, power of attorney. They all have different benefits. The trust, the living trust, is the most important. Your living trust can have ownership in that holding company. And to talk directly about what Eric is asking for with the anonymity portion is, I'm sure that at some point you had the holding company initially, right? And the states that you hear the holding company, Delaware, Nevada, Wyoming, right? I'm assuming one of your holding company is in one of those states. Is that correct?
Well, I don't love Delaware just because it costs more than the other two, I think. And I had Nevada, I had Delaware. I'm just telling you personally, and I actually have Wyoming now too. But Delaware is kind of pricey, but for their annual fees. I don't know what your opinion is on that.
Nevada's even more. We're always going to lean towards Wyoming for that.
So Wyoming is the most cost effective for this structure.
Yep. Anyone that's currently working with us, or anyone that does work with us, you'll see how quickly we go to Wyoming if that's something that you're after as the holding company. And it's they all have similar benefits. They're a little bit different, but they still provide that privacy. My personal preference is absolutely Wyoming. That's what I utilize myself.
Yep.
Mine is as well, and I've switched. I'd be curious if anybody on the call that throw in the chat if they have a holding company, and if they do, where they have it. I'm just sort of curious, because this is the reason why we have these kind of calls, right? Because we don't know what we don't know. When we first start out, we seek out counsel, we seek out advice from somebody that's more knowledgeable than us, but they may be not very knowledgeable relative to the question that we're asking. All right. So we really try to bring in, like you said, you have 40 accountants on your staff with a minimum of 10 years. So my simple math says 400 years of tax experience. Okay. My guy, who I have as my previous guy who was my CPA, he's been in business 25 years. I thought that was a lot, because it is a lot, relatively speaking. But do I want 40 people that have 400 years of collective experience? Do I want one guy that's got 25? And I think that's what we have to ask our questions as we continue to grow. We outgrow a lot of things as we go. And I think what I like about what you and Steve have done is that you guys have positioned all of us, the majority of us, we're never going to outgrow it, right? We're not going to outgrow it from an asset protection standpoint. We're not going to outgrow it from an entity structure. We're just not going to outgrow it. Whereas when we start out in the very beginning, and you know, a good friend of mine, Bob Bloom, he calls it legal doom, because people think legal zoom is the answer because that's what they hear and think. And at the end of the day, it isn't. And it isn't for a lot of reasons, but they will fail to tell you that. And I'm not promoting anybody here, but my point is you don't know what you don't know. And hopefully we're going to be able to provide a little bit of advice. And, you know, whether they go book a call or not, I don't care. Whether they structure their companies correctly, that's up to them. But it's our obligation as educators to explain why this stuff is important, and it's up for them to determine if it fits, and if it fits and it's applicable to them.
Well, Nick, so think about what we do, okay? We acquire a property, okay? That's one thing. Then we sell it. So now we're technically flipping it, okay? And then we're creating a note, and then we sell a note and keep a note. So we have like 4 different things going on with one asset that we create, because we create notes. That we're note creators. We provide home ownership for people that aren't able to get a traditional bank loan, which, by the way, is probably going to be one of the biggest deals. If you can provide this value to your community, it's going to be a really, really nice income producer for you and a really nice value you can provide to your community. Now, these guys, the best part about Prime Corporate Services, when we told them that that's what we do, and we've had a million different questions on, oh, well, is this an installment sale? Is this, you know, do you get paid on, what about phantom income? Because you created a $30,000 or $40,000 or $50,000 note that's free and clear. And how is that going to work? They had the answers immediately. We had a call with them, and they solved our problem. Now, I wouldn't say solve the problem, because we've been doing this for a long time, but the way they structure this, now there's accounting behind it. There's bookkeeping. You guys do bookkeeping, right?
We do, yes.
Yeah, so there's bookkeeping behind it. There's accounting behind it. There's all this stuff. So as you grow, and then as you start building these up, you're keeping your eyes and ears open in our community and other communities for ways to acquire their assets to offset the income that you create from your notes. But the reason we love our notes is because, and Nick and I just literally had this conversation. I go, Nick's brought, you know, out of hundreds of notes in the recent past, the ones we've created versus the ones we haven't, there's not a lot of work to be done. There's really nothing to do. Okay. I just did one today. I created it today. It's done. Great borrower. And I will get, I don't know, $700 a month over the next, I don't know how, for a long, long time based off this borrower. So that's what excited me the most about with you guys is now I can go create, now I can just scale and not worry about, as a business owner who's not a big spreadsheet guy and loves to go find great deals and provide value to my community. That's what I need taken care of in the background. And that's what you guys are going to provide us, which is phenomenal.
Yeah. No, I appreciate you saying it. We will only do bookkeeping for either 100 transactions or more a month. And some of the top earners are over 500,000. And the reason for that is there's not enough value if you're not making that type of money. I'm not able to provide you with enough value. It's more money to you than it's worth to anybody. And the goal is for you to continue to grow. As you grow and as you scale, you're going to give us more business. Naturally, that's how this whole thing's going to work, right? That's why I offer the free consultation. If you take action to set yourself up, make sure you're set up properly. I'd rather crawl before you walk and walk before you run, because there's apps out there that can do that, right? I've got a couple apps that will just send out to you. And it's like, I have no affiliation with this app. It's $170 for a year, and it's going to track all your expenses for you. Until you're making enough money to justify paying a monthly bill, keep that money in your corner, right? I can't play one side and not the other. So the bookkeeping is for some of the higher earners, just to be clear.
So let me ask you a question, because we have people in our program that are doing hundreds of deals. We have people that haven't really done it. They maybe done deals but haven't maybe done a note yet. What's do you have any apps that you recommend for the beginners that maybe they could utilize for that service?
My favorite one right now just came out. They got a couple rounds of funding and it's live and it's working really well. It's Keeper Tax. It was based out of San Francisco, but it's called Keeper Tax.
Okay.
And when you download it, it's like 170, 180 bucks for the year or something,
Okay.
which obviously write that off. But when you do that, you can connect all of your different cards, bank accounts, credit cards. So it itemizes and tracks all those expenses for you. And what's really cool about something like that is if I go to lunch right now and it's unsure if it's a business meal, it'll text me and say, Tommy, was that for business? I noticed you used your business card.
No way.
I just
That's
reply
awesome.
yes, and it categorizes it. It's
So
really
that's keepertax.com. Is that right?
Tommy, so let's talk about it a little bit different and a little different. How valuable is that to you as a company for somebody to use an app like that to collect all the information and then be able to provide it to you in some kind of a flat file format for you to do what you guys do on your side?
100%, right? I have no affiliation. That's me just,
No, my point is that
app out there.
you're act by them using a third-party solution to
Yep.
help you guys do your job. It's actually saving them money because you're a hell of a lot more expensive than $179 a year to collect that data is my point that I'm making, right? So if they create that app to collect it and be able to upload it to whatever that's going to be the bookkeeper, then to the CPA, then to wherever, that's a value add for everybody.
100%. Yes, we've got, once you work with us on the tax side, what we do is we have a secured portal that you have a login to. And what I love most about this is you can log all your previous year's taxes in there, and we can review your previous year's taxes
Nice.
and say, this was left on the table, that was left on the table. But then that way, moving forward, if you need to qualify for a loan or whatever, you need to buy something and you need to get your documents, you go into one portal, everything is laid out in there. Here it is. Qualify me. Let's get the show on the road.
My previous accountant, who I thought was good, I would get in the mail every year. I get an envelope that looks like, you probably can't see it. It looks like it's an envelope and it's a questionnaire, and then you have to fill out the questionnaire. You got to answer all the questions. You got to put all the supporting information. It's a total beatdown, right? That's how people used to do stuff, and it's how people still do it relative to taking accounting. What we're trying to do is do this in a little bit more efficient, effective manner, and that's what I like about what you guys do the most.
100%. But as far as this structure is concerned, the trust, having some ownership of the holding company or having responsibility of the holding company, and then the holding company, you can see I have it owning 4 different entities, right? And this is just to give you an example. You don't have to have 4 different entities, but please separate your active and your passive income. Okay. The reason for that, installments and passive income, all of that can go into one LLC. Just keep it separate from the active income, for the love of God, please.
Why is that? Is it more of a taxation point, or is it more of a risk and liability point? Why would you want to do that? Why don't you want to have everything in one company? Because most people that I know, they got one company and they think they can run all their entire business in one entity.
If you talk to an attorney, they'll tell you it's for the liability. You talk to a CPA, they'll tell you it's for the tax. So I think it truly is both. It really does make a difference. But for me, as an investor, as an entrepreneur, it's from a tax saving standpoint, right? If my active tax rate is 10 to 37%, I want to take all my deductions possible there to lower that tax rate. If my passive income and my installments are 0 to 20%, I can live with that. I'm not overpaying if I have deductions that are actively going on a day-to-day and on an annual basis. So protection's important, yes. Organization is key when you're lowering these. Most entrepreneurs, the largest expense you have over the course of your life is taxes. So the more you understand how to play that game.
Unless you live in my household, I think it's food.
There you go.
It's unbelievable.
Frivolous items that don't have any purpose.
Yeah.
Ask me how I know that, because
Hey,
And
so real quick, I have,
I
I know we have a little bit of time, so so active, so explain active and passive. What's active, what's passive? Give us an example. I guess in our business, as we're flipping, and then we have our education business, and then we also have our consulting business, and then we have our notes. Like, how would you explain the active versus passive there?
Yeah, I think the easiest way to do it is just that over under 12 months, right? So wholesales, fix and flips, consulting, obviously that's ordinary income. It's going to be taxed at the highest rate. Please take the deductions there. But buy and holds, notes, installments, it's going to be more considered on that passive income scale, which is partially why your model is so amazing, because it allows you to play all those different buckets, right? But the
Yeah.
more that you can push towards that active or towards that passive income, the easier it's going to be for you from a tax standpoint as well.
So let's talk about that real quick, because I want to make sure people understand, because we talk about the creation of the, the cash now, cash flow, cash later. Well, let's just talk about the cash flow of it, which is what we're talking about here from the passiveness of it, right? So let's just use a round number. Let's just say we have a $30,000 mortgage that we're collecting on, okay? We're the bank, and it's a 30-year term. Are we taking all $30,000? Do we have to show that $30,000 as a taxable event the year that we created, or is it taxed differently?
Yeah, great. And thank you for this.
And hey guys, I know the answer to this.
I know you know.
I want to make sure that they don't think that some idiot running this.
Nick, why are you yelling at us? Stop it.
Hey, this is something that you do need to yell
Exciting.
at.
I want to ask the question because I got people on the call that are just too afraid to ask, so I'm doing it for them.
Nick, how many people though, with that exact example, have you seen run something like that under the same LLC they do a wholesale with? Because if that's active income, you're paying it on all of
Oh,
it.
dude, you know what? You know why it's active income in their world is because their accountant tells them it is.
There you go.
That's the reason. They don't know any better to say that it's not active income, that it's an installment sale, and this is how it's going to get treated. That's the main reason. They don't know any different. They don't know what the IRS code is. What is it? IRS code 4? What's the IRS code? IRS code 453? I don't even know. I know what it is.
I'll tell you right now. I'm going to put it in the chat.
Yeah, put it in the chat.
The installment, 453.
Hey, I was right. IRS code 453, and it tells you exactly that. Well, I mean, anybody can go look up the code that is an accountant, but they got to know the code exists in the first place. Okay. That's the bottom line.
Here's another thing, but just so we don't run out of time, one other thing that I just want to touch on is business credit and corporate.
Oh yeah, let's talk about business credit real quick.
Everyone has personal name, social, and personal FICO credit score, right? Part of what we want to do is separate your personal and your business legally and financially. So sounds like everyone has a business. Everyone has the EIN number. For those of you that are familiar or not familiar with the Paydex, business credit profile for your business, it ranges from 1 to 100. And 80 to 85 would be like you having a 750 to an 800. So if you can build that separate credit profile, we have a business credit development program that teaches you for a full year how to get starter accounts, gas cars, Staples, Lowe's, how to get into tier 2 to get some actual business credit cards, and then how to get lines of credit over time. The way I explain this, I don't care if you have $1 million in your checking account or $1, having additional capital and building business credit. In 10 years, I'm yet to have someone call me back and say, Tommy, I wish I didn't build additional business capital. That really sucks to help grow and scale my business, right? So if you can, from a financial standpoint, separate that liability, it's a huge advantage here as well.
Well, the other thing about the business credit in the business that we do, the business credit is extremely valuable because we can use that business credit for earnest money deposits or gap funding on deals or down payments when it comes to when we go to do financing, short-term financing, and we need some kind of, we need capital to do that. That's what it's best used for, at least in our business.
Let me tell you why business credit is so important as you grow your real estate business and you become someone that just is doing real estate transactions. Opportunities come when you have liquidity. If you have liquidity and people know you have liquidity and you're able to perform and help JV, I mean, how many people I know in these small or large wholesaling Facebook groups, they all know how to find property. They don't even have the money to put down on an earnest deposit. We were just talking about this the other day. If you can become that person to help out with that. So if you're able to have credit and liquidity and structure deals properly, and you know what to look for. I mean, we have people in our group they're amazing deal finders, but they don't really have a ton of income or a ton of credit or ability to fund deals. Then we have people in our group, they've already made their money. They have all the money in the world and they're not really excited about the stock market and crypto and all this thing. And they just want a nice passive return through an amazing note that was created to a nice family that lives there, but they don't want the liability. So they'll help fund those deals. So we have everything involved in our group. And so, but that's what the business credit is so important. You just can't have enough money. You can't have enough money in this business. It's impossible, right?
Yeah.
100%.
So let's go ahead and finish up your last slide or two, Tommy, and ask a couple of questions because we pretty much got a hard stop in about 7 minutes here.
Perfect. Yeah, Gary's got a question here as well. Should he separate public versus private stuff to protect private stuff from lawsuits? Yeah, I mean, let's try and make everything as private as possible, right? If you have a buy and hold and someone slips and falls, I don't want them knocking on your door or showing up at your house because that's public information on your state website. Let's try and make it private from the very beginning so you don't have to deal with that issue. But if you have public and private, it's just your risk tolerance, right? If you talk to an attorney that just wants to sell you more entities, they're going to say, absolutely, Gary, you better set up all the entities in the world. But I'm going to tell you, let's just make sure you have a structure like this that's simple and easy and flows, and you understand where things are moving, and your name and your address are not publicly listed. And that kills two birds with one stone.
So real quick, when you say your name and address is not publicly listed, but you're the signer, because obviously anonymity, especially in Arizona and pretty much everywhere now, the signer or the guarantor, whoever signs on the loans or transfers the deed or any of that stuff, how do you guys recommend the managers, the members signing on behalf to protect that? Or do you have attorneys signing on your behalf, or the way the structure is set up, it actually covers that even though you're the signer?
Yeah, a lot of that really is going to depend on the lender. If you can avoid signing for it for you personally, then that's great. But if it's being owned by a holding company that owns a active LLC or a passive LLC, then you're obviously going to avoid that from the very beginning as well. So a lot of that comes down to the lender and what their requirements are going to be. And once again, not all banks are equal. Some will lend to other different types of business. Not all attorneys, not all CPAs. Lenders are in the same category, right? I'm sure you guys have worked with lenders that are awesome and some of them that just don't know what they can and can't get away with. So if it's owned by the entities, you're giving yourself the privacy. Understand what is private and what's public from a document standpoint.
Right.
And so the last thing, because I think we're out of questions. Anybody else has a question, dropping in and out. So really just in a like 30 to 45 second explanation, what kind of things will they be able to discuss on this 45-minute one-on-one discovery call, and how should they prepare for the call to get the maximum value out of the time with you guys?
Yeah, absolutely. Free consultation, right? There's not much that can go wrong from getting another opinion on your situation. As far as preparing for the call is concerned, come with what you have in place. That's going to make the call most effective. how many LLCs, how many S corps. If you want to talk about income levels, feel free. If you want us to earn your trust in those areas, that's fine. But the more that we can know with how you're structured initially, the easier it is to help you understand where your holes are, where the weakness is from a privacy and a protection standpoint. As far as the services, business entity structuring, business credit development, tax savings, tax filings, and estate planning is what we focus on. But come to the call with what you have in place so that we can make sure that we're giving you something, some sort of takeaway that's going to better yourself or better your business.
Hey, Tommy, I thoroughly appreciate the time. I enjoy work with you guys. I hope the group has got some value out of this overview. Go to the website, book a call, do yourself a favor. It doesn't cost anything. Get some expert advice and just evaluation of where you guys are today and potentially where you want to go. And we'll reshare this again within the group as well. So
yeah, we'll reshare it. But the other thing is the great thing about your consulting calls, you're a beginner or you're a very high level investor, like the conversations are real. Like this isn't like, you guys know what the heck you're doing. It's really, I mean, you're really working with some high level people that can help the guys that are just starting out to people that have really, really high level businesses. That's why we work with you guys now. I mean, it's fantastic. So we appreciate you for sure.
Right back at you. I appreciate you as well. And for those of you that are more experienced, please just tell your representative that, right? If you're brand new, they're going to treat you like you're brand new and they're going to try. Our goal is to make complicated topics as simple as possible. So if you are a little bit more advanced and you need some more information, tell them that in the beginning so they can make sure you're getting value out of that call. That's the goal.
yeah. Hey, Tommy, thanks again, guys. Thanks for listening. You got the information in the chat box. Take advantage of the opportunity. We'll also post it in the Facebook group, and you can also post some questions inside the community, and we can do our best to either answer them directly or even have somebody on Tommy's team to go in there if there's anything specific. We'll make sure we get answers. I like asking them in the group because then everybody benefits from the answers and the questions. So
I agree.
Yeah.
all right, guys, you guys have a good week, and we'll see you next week for Office Hours Live, Tuesday, 11 a.m. Eastern.
See you guys. See you, Tommy.
See you
Thanks,
guys.
Tommy.
Thank you.
Later.